Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, February 13th. As you can see, markets, Nasdaq is quite bullish. We are following this 45 EMA as support. As you can see, higher lows, higher highs, quite nice and clear trend to the upside. Right now 1.52% on the day, but be careful because point of control, we've been moving that up, this yellow dot line. We've been moving volume to the upside, and at some point we are going to pull back and fall below this 45 EMA ahead of tomorrow's CPI data. Remember, today we didn't have any economic data release, but tomorrow is a big day, 1 hour before the open CPI data. This is regarding the Nasdaq, but before moving to the rest of the charts, let me show you something. This is sector funds the last 5 days, and you can see clearly there's two outliers. This green XLE energy 4.80% last week, and on the other hand, XLC communications minus 3.42. So in the middle, we have technology also quite up. We've been bullish last week and plus 2%. And healthcare is in here, defensive sector, financial, staples also on the positive. And XLY consumer discretionary is also in the red. So there's a little bit of discrepancies, and something that might be concerning is not XLK being 2%, it's just XLE energy being up there, and also XLC communications being that low. First of all, let's recap XLC. XLC index is composed, the weight is basically Meta, Google, Verizon, and Disney, and Netflix. This is basically the most amount of weight in between the sector. So as you can see, the change in the performance, let's check this real quick, is not good. So basically Meta has been pulling back a lot. Google with the Bard disaster, Verizon not doing good either, Disney reporting more or less mixed earnings, and Netflix right now a little bit on the green. But XLC is part of the tech companies that are in the communication sectors, and as you can see, we didn't have a beautiful performance. That is in contrast of XLK, the big tech, which are actually bullish. So be careful with the subset of the XLK sector funds that compose the communication sector, because that might be going down and affect your portfolio. And then let's talk about XLE. XLE energy, as you can see, today is pulling back, but Chevron, Exxon, Marathon, Pioneer, Occidental Petroleum, XLE was the big boy last week, because due to earnings, all these companies, petroleum companies, crude oil companies, are releasing super good earnings, a lot of profit. So basically they were super bullish. Finally, let's talk about XLK. XLK is, as you can see, let's recap the performance on the Nasdaq, because we are still bullish. We are still holding this 45 EMA, and we've been above point of control volume since the entire of the day. So Apple is 1.72. Microsoft continues super bullish, 3.92. Look at this. After this sell-off, look at this bounce. Microsoft, it's flying thanks to ChatGPT, basically. Tesla, a lot of people is telling me that this is an island reversal. I think so too, but we have to be careful, because this doji reversal doesn't mean that we are going to be at 100 in the coming weeks. But I think weakness is around the corner for Tesla. So that's why we've been having this kind of pullback, and this doji today is, well, a little bit of buying, but nonetheless, minus 1.20% for Tesla. Amazon 1.74, helping that consumer discretionary to go higher. XLY 1.24, that's good for the economy. And look at this, Nvidia 2.84% and Meta 3.20. Meta, interestingly, was trying to fill this huge gap after earnings, but I think a lot of people is buying Meta to the long term due to the performance and also the cut of the employees and a lot of measures they are putting in place in the company to reduce cost. They are doing their job. I think that's why a lot of people is bullish long term for Meta. Let's go back to the Nasdaq and see again what kind of day we had. We were super bullish. Yesterday we had, as you can see, equilibrium. This volume profile is equilibrium, just in the point of control in the middle, and we were just range bound, hopping back and forth between high of day and low of days. But this pre-market, look at this, since it's not the range, since the low, not the low, but basically this support, look at this, we are almost 2% since that pre-market action. And look at the open. I mean, we are flying. A lot of people is expecting good CPI inflation continue going down, but be careful because that doesn't mean that Fed is going to pivot. Let's check dollar real quick. Dollar is in the red. It's consolidating up here, and I think it still looks good for a move to 105. And let's talk about yields. Terminal rates, April, waiting. This is clearly waiting for tomorrow. September, this is not waiting. A lot of people are waiting. I think a lot of people already know that in September we are going to be above 5%. 5.20 is the thing that is concerning a lot of investors because it's not the same to be right now at 4.75 that to be at 5% or 5% plus an entire year. And that is going to destroy a lot of economy, households, lawyers. A lot of the economy is going to be down. It's not a matter of the terminal rates, that's important, but also we are going to be the entire of 2023 at these levels, and that is going to be painful. December is pricing in an interest rate cut from 5.20 to 5, so 25 basis points of cut. However, Fed already said that they are not planning to have any cuts this year, so bonds market are putting a bluff, maybe. They are putting pressure on the markets, but I don't think we're going to see any cuts this year either. So I trust the Fed, and I think this April at 484, it's quite, I mean, it could be great, but I don't think it's going to happen. Let's check the CME Group website to see how we are today regarding terminal rates. So still 90% for the 25 basis points in the 22 of March. But let's talk about this. So this is the future FOMC meetings until the end of the year. And as you can see, we are moving from 475 to 5 at 90% in March. Then in May, we are going to be most probably raising again to 525. And that is what the bonds market are pricing in. Then look at this 50-50. We are going to wait at 525. We're going to be at 5P50. This is going to be super huge. So there's a lot of uncertainty at these levels. And then we maybe, if we don't move from 525 to 550, we are going to be at 525 until the end of the year with 30 or 40% of probability. I don't think we are going to be at these levels, 475, 30% of probability. That's why I don't trust these futures. You just say 5% at the end of the year after a rate cut of 25 basis points from 525 to 5 at the end of the year in December. I don't think so. But what is clear is that regardless the terminal rate, 525, 550 would be insane. I think being at that 5+% of interest rates is going to destroy the economy. And a lot of people is starting to fear that soft landing is not going to happen. That's why we started rejecting high pricing after earnings. Earnings were more or less decent. It's not super good, not super bad. But I don't think we can hold these levels all this year. I don't see Nasdaq putting a 14,000 in the upcoming months. I think we are going to retrace to find proper value, then consolidate there, waiting for Fed to see if we push 525 or 550 after seeing inflation reports in February, March, April, and May. We have to not only think about day trading, we have also to think about overall sentiment and how the markets react for tomorrow and for the rest of the CPIs until May and June. This is going to be super interesting, but be careful because still there's a lot of hedge funds, big banks, big players that are not buying this. This is all retails. I think retails found out that tech were at a good price point, and I think they started buying ahead of seeing an economy and terminal rates recovering. So be careful because Fed's not pivoting, retail's buying. If CPI comes higher than expected, and we start seeing not good economic data, this can be a disaster. So manage your expectations, be patient, wait for those reports, and just take those opportunities. But be patient. Don't just be smart. Analyze your indicators, the other markets, and trying to think about midterm instead of just going all in because you think that economy is recovering. I would like that, but I don't think this is the time to think that way. Finally, let's quickly see tomorrow. As I was mentioning 1 hour before the open, inflation rate, we are expecting a decrease in the headline inflation rate general, and also decrease in the core CPI regarding year over year. But be careful because this can be quite dangerous. Month over month, we need to see that lowering because year over year, obviously, we are comparing with last year in which we already had a lot of inflation. So year over year is quite tricky and statistically is not going to provide a lot of information regarding if inflation is going down really actually or not. We have to focus on month over month. We need to see a constant slow accelerating, and also at some point in April, May, June, we need to see negative inflation. We need to see that lowering. At which level the Fed will stop hiking rates, 525, 550, we don't know. But we are not there yet out of the tunnel. We are not out of the woods. Be patient and wait for tomorrow. That's my recommendation. So as always, thank you for your time. If you find this video useful, please remember to click the like button and subscribe to the channel. Remember that I upload new videos every single day for market forecast, market updates, and market recap. I appreciate your time, and remember the training day is not over yet. Let's check real quick before closing. Nasdaq still super bullish. We are pushing 12,500 if we check the daily. This is looking nice, but we are still below these resistance levels ahead of the important day tomorrow CPI data. So discipline, risk management, patience, and be smart. That's key for success. Stay safe, everyone, and see you tomorrow.